Stocks. They represent securities that grant the holder a part of the ownership of a company. Each share symbolizes a fraction of the company's share capital and offers certain financial and decision-making rights. Companies issue shares to raise capital, either to fund growth or to invest in new projects. Bonds are debt financial instruments through which an investor lends money to a company in exchange for regular interest payments and the repayment of the borrowed amount at maturity. Basically, you lend them money, and they commit to paying it back after a certain period of time, along with a fixed interest. Investment funds is a financial tool that collects money from multiple investors and invests it in a diversified portfolio of assets. These funds are managed by professional fund managers who make investment decisions to maximize returns while managing risks. Diversification helps reduce risk, professional management, and liquidity, allowing investors to buy and sell fund units easily. However, they also involve fees and costs, which can vary depending on the type of fund. Financial derivatives are contracts that derive their value from another asset called the underlying asset. This asset can be stocks, bonds, commodities, currencies, or stock indices. REITs is like a big pot of money that people put together to invest in buildings and properties that make money. Instead of buying a house or an apartment yourself, you can buy a small piece of a REIT and earn money when that REIT makes profits from renting out or selling properties. Metaverse and virtual reality. The metaverse is like a giant virtual world where people can interact, work, play, and even buy things, just like in real life, but on the internet. Think of it as a mix of video games, social media, and virtual reality, VR, all combined into one big digital space. Here are some of the things you can purchase: virtual land, clothing and accessories for your avatar; NFT, tickets to virtual events; virtual money; SPACs, a mystery box of money created to buy another company. It's also called a blank check company because investors put money into it without knowing exactly what company it will buy later. Cryptocurrency is a digital form of money that exists only online. Unlike regular money, cryptocurrency is not controlled by banks or governments. Instead, it uses special technology called blockchain to keep transactions safe and transparent. Crypto is much more volatile and risky. Cryptocurrencies have real projects, technology, and a purpose like Ethereum or Solana, while meme coins like Dogecoin, Shiba Inu, or Official Trump are often created just for fun, without any real use. Real estate, a major sector of the economy and an asset class that offers opportunities for passive income, capital appreciation, and protection against inflation. Private equity refers to investments made in companies that are not listed on public stock exchanges. These investments are managed by specialized firms that raise capital from institutional investors and high net worth individuals to acquire stakes in private companies or to take public companies private. DAOs. Investments in startups involve the use of decentralized autonomous organizations to collect and manage the capital intended for funding new businesses. These entities operate on the blockchain and allow decision-making through voting using digital tokens. Hedge funds. Hedge funds are private investment funds that use advanced strategies to generate profits regardless of market direction. They are accessible only to sophisticated investors and utilize instruments such as leverage, short selling, and derivatives. Hedge funds charge fees using the 2 and 20 model, a 2% management fee and 20% of the profits. Loan notes. Loan notes and bonds are both debt instruments, but there are essential differences between them. Loan notes are more flexible, as they are issued by private companies or legal entities to raise financing. Collectible assets. Throughout time, people have been drawn to rare and special objects, keeping them not only out of passion, but also for the value they may hold. These include items such as paintings, old coins, classic cars, and old alcoholic drinks. The market for collectible assets has expanded significantly, influenced by global trends and the growing interest in alternative investments. Carbon emission certificates. They are used to regulate greenhouse gas emissions, granting companies the right to emit a certain amount of CO2 or other pollutants in accordance with environmental policies set by governments and international organizations. The carbon credit market operates on the pay-to-pollute principle and encourages the transition to a more sustainable economy. But fluctuating prices can create uncertainty for investors and businesses. SPVs. It is a legal entity created to fulfill specific, narrow, or temporary objectives. It is typically used by companies to isolate the firm from financial risks. SPEs allow tax avoidance strategies that are not available in the main jurisdiction. Crowdfunding. It is a financing method in which multiple people contribute small amounts to support a project, a business, or a cause. This takes place through online platforms and provides an alternative to traditional financing. Commodities. Fungible physical goods like gold, silver, oil, uranium that are used in industry, production, and global consumption. They are traded on specialized markets and can be used as investment tools for diversification and inflation protection. Alternative industries represent emerging sectors with high growth potential due to innovation. Some examples are esports and gaming, where already exists international tournaments, massive audiences, and billion-dollar companies make gaming one of the most profitable industries. Biotechnology and healthcare. Advanced technologies such as gene therapy and AI in medicine are revolutionizing treatments and the pharmaceutical industry. Alternatives to traditional products, such as lab-grown meat and vertical farming, are redefining the food industry. The global transition to sustainable sources such as solar and wind power is becoming an economic and ecological necessity. Venture capital. It is a type of financing in which investors provide venture capital to startups and early-stage companies with high growth potential.
Subscribe.